Welcome back friends to the class number 50. In the previous videos we have covered the topic of MPBF norms in full detail. Now in part of that series we are covering the topic of drawing power. What is drawing power, how it is calculated. We will make 2 or 3 videos for understanding the drawing power topic, right? So in today's video we will discuss about the basics of drawing power. I have told you in the 3-4 videos before starting the MPBF norms that even if you are eligible for a working capital facility as per the MPBF norm, still you have to justify the drawing power norms as well in order to actually avail the limit. But there is one fact that you need to understand, that the drawing power calculations are only applicable in case of cash credit facility. If you are availing any other facility like packing credit, letter of credit, buyer's credit, then in that case the calculations of drawing power will not be applicable. Although those facilities will also have impact on drawing power, that we will learn in coming videos, but the primarily calculation of drawing power is done only on the eligibility of cash credit limit availment, right? So it is applicable only for cash credit limit, that you need to understand. So even if you are eligible as per the MPBF for X amount of limit, still you need to justify the drawing power limit as well if you are availing the cash credit facility, right? So you can use the limit if you have been sanctioned cash credit facility of rupees 100 lakhs. If you are sanctioned the cash credit facility of rupees 100 lakhs as per the MPBF norm, and your drawing power comes to rupees 90 lakhs, then you cannot use cash credit limit beyond rupees 90 lakh. You can use up to 90 lakh only, right? But if your drawing power is suppose 110 lakhs, then you can use maximum of sanctioned amount, right? So you can use limit as per the drawing power versus your sanctioned amount, whichever is less. The lower of both will be the amount that you can maximum use to avail the cash credit limit. So how drawing power is calculated? Let us learn the basics today. For calculation of drawing power, we consider 3 main items. The first item is your stock. The second item is your debtors, the receivable amount from your customers. And the third amount is your creditors, the amount payable to your suppliers. You have invested money in your stock, you have invested your funds in giving credit to your customers. These two represents your total investments, and this is the support that you have got from your suppliers. So this is your net investment, right? Out of this net investment, 25% shall be contributed by you as your promoter margin, and rest 75% of this amount will be allowed as drawing power to you. So drawing power is simply stock plus debtors minus creditors. The whatever the figure comes, you do 75% of it, then you will get your drawing power, right? So that 90 lakh rupees, that amount that I have wrote, is your drawing power, right? That is calculated by doing this calculation. So there are few things to understand in these 3 items. First, let us pick up the stock. For stock, your stock should not be older than 180 days. Of course, this norm may be different as per industry to industry, and this also depend upon the risk or call taken by the bank. Some bank may allow even 270 days old, some bank may allow only 90 days old, right? But generally it is standard 180 days. Means your stock on which you are asking for drawing power from the bank should not be older than 180 days. So suppose if you have purchased an item on 1st of January, if you have purchased an item on 1st of January for rupees 10 lakhs, then it means that you have to sell this item by 30th June. Within 6 months, within 180 days, you have to sell this item. This item should not be in your stock post expiry of 180 days. If it is in your stock post expiry of 180 days, then banks will consider that this is a kind of non-moving stock or kind of an obsolete stock which you are not able to sell in the market, for which there are no other buyers who want to purchase this item. So the bank consider this as dead investment, as kind of your loss, and they don't want to give any loan or facility to you on that kind of stock, right? So be careful when you take sanction from the bank, that how many days of stock that bank have allowed to you, right? And we can say in simple language that how many days that bank have allowed that you can take to sell your business item, right? So it should not be 180 days, more than 180 days old. Then your debtors, once you have sold that stock, then you have to recover the payments from your customers as well. So banks may allow, depending upon the business model, industry to industry, different timeline to you to recover your payments. They may allow 90 days to you, 120 days to you, 150 days, 180 days, right? The banks may allow you different time period to recover the payments that on the stock that you have sold. Generally it is considered as 90 days. So by 30th June, you have to sell this stock, and if we add 90 days more, which means June, July, August, and September, by 30th September, you have to recover the amount from your customer as well, right? So technically 180 days plus these 90 days, bank have allowed you 270 days worth of period to keep inventory, to sell the inventory, to recover the payments from your customer. So I think 270 days are kind of more than enough for you, right? So generally the debtors should not be more than 90 days. So suppose if you have sold the item on 30th June, then you must recover this item before 30th September. If this payment is still standing on 30th September and bank has allowed maximum 90 days to you, then you cannot ask the bank to provide you loan on such kind of amount, right? So be careful when you read the sanction letter about how many days of period that debtors have been allowed to you, right? So it depends on totally on case to case basis and overall industry judgment. One more thing that you need to remember in debtors, the goods that you have sold to the customers and the amount recoverable from them, it should not include amount recoverable from your group firms. If you have sold goods to your group firms and the amount is recoverable from them, then this amount cannot be included in your debtors to claim the drawing power, right? So although it is purely a bank decision, exceptions can be there. In some cases, even I have in my practical life allowed customers the inclusion of their sister concerns in their debtors, but these are very rare or exceptional circumstances. You have to be very careful while dealing with the bank or while sanctioning loan to the borrower, whether to include the sister concern debtors, sister concerns recoverable amount in debtors or not, right? Because there are high risk of diversion of funds, high risk of ingenuity in the transaction with the sister concern. You never know whether actual sale has taken place or not, or whether this is just a book entry in order to claim higher DP, right? So these sister concerns debtors are also not included in the total debtors, right? So when we come to the creditors, one thing you need to remember, the creditors are always considered for full amount. Bank being conservative always assume that you have to pay your creditors, whether in next day, whether in 90 days, whether in 120 days, whether in 365 days, but it doesn't bother the bank. If there are creditors, you have to pay them. Whether they are more than 12 months old, bank doesn't care about it, right? It is only the stock and debtors that they put restriction on. There is no restriction on creditors. You have to include all your creditors while calculating this formula, right? So now the question is, of which date the stock figure should be taken, of which date debtors figure should be taken, and of which date creditors figure should be taken, right? The stock can be different on 1st of June and can be different on 2nd of June, can be different on 3rd of June, and similarly debtors and creditors will be different on different date, right? So what is the standard on which date these figures should be taken? So the banks have decided to take a stand here. They are taking these figures on the last day of the month. On the 30th or 31st of the month, you have to declare your stock, debtors and creditors figure on the last day of the month, at the end of the last day of the month, right? So how it is declared, how it is provided? So there is concept called stock statement. You must have heard this concept called stock statement. Stock statement is nothing but just a declaration by the borrower. In this declaration, he declares the amount of stock, debtors and creditors. It's just a declaration. It's borrower's only declaration. Bank doesn't verify the actual figures of stock, debtors and creditors every month, right? So there are high chances of fraud in here. The borrower may declare the wrong amount of stock, debtors and creditors in their stock statement and take higher DP from the bank, right? Thereby kind of diverting the funds of the bank, right? So there is the risk of fraud, and due to this there is a concept of annual or monthly or quarterly or 6 monthly, half yearly stock audit in the banks. If a case is very big ticket size case, more than 50 crore, 60 crore, then even quarterly stock audit is also done by the banks. This stock audit is done by the external empanel agency, which is basically a chartered accountancy firm. This firm visits the premises of the borrower, they verify their records and they verify whether these figures that were declared by the borrower previously in their stock statements were genuine or not, right? They verify all of these figures, they verify the physical inventory at site and many other multiple things that they verify when they do the stock audit, right? So although you can also analyze the stock statement, monthly stock statement given by the borrower, and you can also check whether these are genuine or not, but this is a point that we will discuss separately in a totally separate video, right? So the borrower gives stock statement on monthly basis, and some banks even allow the quarterly stock statements as well. If they are allowing you quarterly stock statement, that means you have to submit the stock statement. By stock statement, I mean you have to declare the figures of stock, debtors and creditors, self-declaration, by the end of each quarter. In other words, 30th June, 30th September, 30th December, 31st December and 31st March. You have to give the figures as on these dates. So suppose you have given the figures on 31st of March of so and so X amount of stock, debtors and creditors, and your drawing power works out to be rupees 10 lakhs. Then this 10 lakh rupees drawing power, if you are submitting quarterly stock statement, then 10 lakh rupees that drawing power will be applicable for whole of next quarter. You have submitted this figure on 31st March, as of 31st March, right? So this 10 lakh drawing power will be set for April, May and June month. For April, May and June month till you submit your next stock statement. So your amount gets fixed if you submit a stock statement. If you providing monthly stock statement, then you have the option to submit monthly data. So suppose if you are submitting on 31st March the drawing power of 10 lakh, then whole 10 lakh rupees, the maximum amount that you can draw down, will be applicable for April next month, for whole of April month till you submit the next stock statement on 30th April. And some of you might say, sir, this is not a good practice. He may need funds, higher funds in May. The things may change in May or June or mid of April. So he may be needing higher funds. So if we fix the amount of 10 lakh rupees for whole quarter or whole month, that somehow can hamper the client's business. So there is a provision to submit the revised stock statement as well. You can submit the revised stock statement or called interim stock statement in middle of the month as well. This is also allowed exceptionally by the banks, right? So the stock statement format is different for different bank, and some banks take the physical stock statement, some banks only take the stock statement over an email. Some banks have their own software and ask the client to put up the figures on their software only, right? So this is the basics of stock statement, which is prepared on the last day of the month. And I have already told you that for March month stock statement, drawing power will be on 31st March and will remain active for April month, right? So you have to be very careful before submitting the stock statement. First, that you are not submitting the incorrect data of stock, debtors and creditors, and second, you are submitting the sufficient drawing power that will cater your whole next month or next quarter needs, because the acceptance of revised or interim stock statements in the middle of a month is a rare exception and it is not allowed easily, right? So I hope you have understood the basics of drawing power. We will meet in the next video to cover more complexities. Thank you very much.